The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. The voice is getting a little better, and we should have fairly plain sailing through the show, let's hope. Dow's down 20 at 25,365. A couple of things were going on. One is I said to subscribers to my opening call, if you look at let me show you right here. The volatility index spiked to a leg F/B yesterday. In fact, it went to, yesterday was the 9th. So it closed right there. So it had a high of 10.09, actually 10.14 or so. And it seemed to me, from everything I was looking at, that the volatility index, that is a measurement, they call it fear and greed, just for argument's sake, let's just say fear and greed. When it goes high, it is displaying market perception that things are not good, and that leads you towards this fear factor. And when it's benign and it's low, down in the below 10 area, especially below 950, that just says, hey, ho-hum. Nothing to see here, folks. This is a benign market. What's really important is that I could not see with that kind of action where markets are making all-time highs, the volatility spirals from the 892 area just on the 4th and screams up into the 11s. That's 2 points. That's what, 28% or something like that. That is very big. So I'm looking at this and I'm saying, okay, what I'm looking at is a sense that there was too much fear, and I wasn't sure what had brought the market down overnight, and was down pretty sharply. Dow was over 100 points down. S&P was over 13 points. And I'm looking at this and I'm saying, no, I don't want to go short right now. This is an ideal time where I would like to go short, but not under these conditions, not where the VIX is already high. And then all of a sudden we get the market, let's say it's down 100 and something points, and the VIX, where is it going to go to? It's going to go to about 1150 or maybe 1125 over the previous inversion where the VIX hit 11.06, 1107 back on the 2nd of January, and then just the market turned around and spiraled up 500-600 points. So I'm thinking here, there are other conditions, which I say to my subscribers, let's stay in our long positions. There are a couple of things that I would like to short. We're not going to get the best price. I don't want to just take a stab and say, this is the price that I want. Here are the conditions. If such and such an index is below such and such a price at 3 o'clock, this is what we want to do. And that's kind of the way I'm looking at it. I think you have to be very suspicious of shorting too quickly here when the bias has really been towards the bullish side. So enough with that. And within the context of the markets, I'm thinking that there's a chance. Oops, here comes the scratchiness. Little t. There is a chance that we're making a peak F/B right now in the daily. It's pulling back in that fourth wave of the Chapman wave sequence that we're looking for, with a chance that we're going to go above 25,439 to make a new high, back into the Chapman wave inside track repellent zone, and right there, somewhere between 25,440, maybe even 25,473. That's where we have to start looking to see whether or not we're now under pressure in certain sectors of each index. So what's going on in the Dow, what's going on in the S&P, Qs, SMHs, etc. All right, let's get out of this and we'll go straight to our numbers. Dow down 23 at 25,360. The S&P is at this particular point down 5 at 2746. G/C up in that resistance area, the inside track repellent zone, made a high yesterday of 2759.14, trading at 2746. Support for the Dow at this point is the 25,300 level. Let's make it 25,270s. The S&P support right now is at the 2736 was the low today. I would give a little more. 2732 is going to be a really important support. QQQ is down 81 cents at 161.75. This is going to be absolutely fascinating. Is this a single leg A-up failure pattern? Or is the stochastic and MACD going to hold beautifully? And all we find is that the 160.51 support is fabulous. Doesn't even get there. In fact, in 2 days' time, it's a new recovery high above the 163.04 level, and that would be very positive. But if there's a pullback under 160.50, the 9-period moving average, be a little careful. IWM made its leg D yesterday in the Chapman wave. That was very important. Pull back a little bit today. It's down 15 cents at 154.67. Support levels to hold 153.90. It's at 154.66. And resistance, it's kind of open actually. If it breaks above 155.50, could even go to the 155.80, 156.10 area. Yeah. Okay. I want to get to gold. This is going to be fascinating. Gold right now, up only 4 points. This exact physical relationship of gold right now, spiking to a new recovery high and then pulling back, testing the 9-period moving average with the MACD strong, stochastic still at 88% is something to watch very closely. This is a pattern I've seen a number of times over the last, I'd say 3 to 7 sessions in many charts. I always find that patterns, even if they're absolutely unrelated tradables, in other words, completely different sectors, very often a pattern that forms is like a template or a fractal to be repeated elsewhere. So I'm going to be watching this pattern very closely. Why? Because if gold cannot break the high of today, which is at 1,328.6 in the next 3 days, but instead takes out 1304, pretty important support, I think gold is going to have a bit of a pullback here. But that doesn't mean just say, I'll just quickly do the silver. Silver is acting a little differently in that it's already made a peak C. It should today have tried for, at least by tomorrow, tried for a D, but it's not. It's under both the 9-period moving average, 200-period moving average, and the 200-period simple moving average. I'm suggesting to you at 17.01, watch 16.83 as key support, and a new high, a recovery high would be important. And very,
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So coming back to the whole metal area, we've got platinum, which is trading at 976.90 up 460. Now this is held very well. This is what I was looking for. If gold had completed its consolidation after a spectacular move to the upside, then I would expect this pattern right now, where you had a high in platinum on the 8th of January at 979.20, pull back a little bit, make a peak, so it becomes peak B. Today's action just failed underneath, well, the day's young, because only not even, 3 hours to the open, not even 3. So 979.20, remember it was 979.20, 979.20. Oh, I just thought it was a penny less. Okay, an exact double top B, peak B. Now it's leg B, double topping. No, I shouldn't say double topping because it could go high, but it made an exact replication of that high. So, and it went down to the 9-period moving average of 962. So this is excellent action. The MACD is still very strong. The stochastic is holding flat at 96.32%. Let's skip the middle chart, which is the weekly. Let's skip the monthly chart, which is the on the right. Let's keep focusing on this. Keep your eye on the left side chart. Let's go back here, and let's look at this one here. And you see the difference? We made a new high today. The MACD is already started to flatten out. Very strong, but it's flattening out. Stochastic is pulling back, but still at 88%. On-balance volume is lower. If you keep your eye on this, do it once again. Keep your eye on this little, I'll make this I don't want to make it a yellow. I'll do it yellow just to make it highlighted. Okay, I'm going to get rid of it in a moment. So keep your eye on this yellow right there, on the yellow circle, oval. Here we go. And what we're looking at is made a fractional new high, but the price is below yesterday's entire body of the candle. Day is young. Anything can happen. It went under the 9-period moving average and is so far above, quite nicely above it. Keep your eye. Here we go. There's a difference in these two patterns. It might be very subtle, but it's so far positive enough to say that the MACD hasn't even started turning down. Stochastic isn't at 88%, it's at 96%, and this is platinum. So all I can say is right as we're speaking at this moment, platinum is holding beautifully. This is, if this pattern was right now in the gold, maybe it'll be later on, I would be saying, okay, I know that gold stocks actually haven't participated as well. Many of them have actually pulled back quite sharply, but I'm prepared now to start looking at the gold side. I think there's another little bit to go in the gold and maybe the gold stocks, just in the terms of the consolidation. So let's get out of that. I want to do high-grade copper, then we're going to go to the currencies. Now, the pattern that's unfolded in the high-grade copper when it went to a peak C on the 28th of December at 3.222. And then it's just had consecutive days of lower highs and lower lows, just keeps going down trough A, trough B. It's in potential trough C if there's no new low today. MACD's turned down sharply, stochastics turned down sharply. Copper is struggling somewhat. And today had the opportunity to close near the highs. So far, it is in the lower third. So I'm looking at this, see the different weekly patterns? So they're all different. You've got to treat them differently. I'm thinking copper is telling us that it's getting close to forming some kind of a base. And if it doesn't have a rally into the 3.265 area in the next few days, but instead takes out 3.20, it's going to have maybe an even longer timeout. And that's really what I'm looking at. Let's go to the USD JPY. This is the yen. The yen right now is having a huge slump. It's gone, look at that. It's made an arch formation. There we go. Arch formation in the weekly, second arch formation. Monthly chart still okay. It's within a trading band. But this daily chart, that is a huge move to the downside. Now we must see, is there a comparable move in the euro-dollar currency pair? EU or USD. And what do we see? No. In fact, it's kind of weak. Euro pops up and then pulls back, made that peak E, almost looks like the copper chart. So I'm looking at this and I'm saying, okay, there are a couple of things that are going on here. We have to put the whole panoply together. I'm going to do that in a little while because this is, you're really looking at, this is like a jigsaw puzzle and you want to have all those pieces together before you can really confirm 100% that you've identified the picture correctly. Of course, sometimes you can do that with a couple of pieces missing, but I'm looking at this and I'm saying, I haven't yet got a down arrow in the euro-dollar currency pair. In other words, the euro, the MACD has not crossed negative. The stochastic is very poor at 68, not very poor. It is poor at 68 with a widening differential between the faster moving average and the slow moving average. Now I want to get to what I've been waiting for. The dollar. The dollar at this particular point is down, but not anywhere close to where it was. And one of the reasons why I said this cluster formation, remember I spoke about the sandwich? This is where you get a very strong, usually it's red, green, red. Sometimes it's green, red, green. But you get a huge candle at one of the ends of the move. So if it's a daily chart, you're looking at perhaps the high, most recent high. You suddenly get a very sharp move to the upside, followed the next day by a very strong whipsaw action, but actually the candle just falls in between the red candle and the green candle, or the green candle and the red candle. You have 3 consecutive days, 1 day, 2 days, the third day is the sandwich. So you get the outside is the big green, the inside is the big red, and the next outside of the sandwich is the whatever color it is. In this case, it's red, green, red. And what I had said is, if there is a close below the low of the 2nd of January in the dollar index, 91.75 was the low, I would say dollar's in trouble. If there is a close above and any pullback holds above, you might have started a little bit more than a counter trend bounce. It could actually be a counter trend rally as the dollar continues to consolidate. So this is the category I'm in right now. We are still long in my opening call for subscribers, long on the very day of the low, that 70-week low. We went long in the 91s. It's trading at 92.29. We are long via a horrible vehicle, the UUP. It's the only thing you've got. It's the direction shares. It is the only way I know of that you can play. It's called the dollar bull, and it held its stop and so far. It's holding okay. But look at this. The dollar early this morning was looking very poor. Now it is in the halfway range, just above halfway. It's at 92.28. And even more important than that, it is saying under the. Now, I remember hearing people say, I didn't quite understand it because I'm just listening and I've got my own way of looking at markets, that if yields go higher, it should help the dollar. I haven't quite figured out that because I don't actually see a direct relationship there. There has been at different times, but I'm not sure if that is a relationship that is sacrosanct. So I'm looking at this, I say, wait a minute, yields are moving up and dollar is down. Well, the day is young. The dollar's only down 21 cents. Look at this arch formation. This is an arch formation that should fail, but wait a minute. If you look at the weekly chart, I'm going to open this up nice and big. Look at the weekly chart. It's made a very big cup. This is like an inverse cup and handle, upside down, of course.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow's down 13. S&P's down 4. So we're looking at the weekly dollar. Dollar goes from 91.92 May of 2016. Rallies all the way up to 103.82. January, week of the 6th of January 2017, takes exactly the same, using this as a plumb line. It's a technique I like to teach when we do our classes. If it's possible to find a mathematical formula where it looks visually, it has to be visual first, that high could in fact equal the same number of bars to the downside, that's great. Sometimes you have to move it around. I'll show you one instance in a moment. But this was exact. Exactly two of the downside targets were hit exactly. This one went to the exact week on the week of the 8th of September at 91.01, fractionally under the previous low of 2016. My rule of thumb, it must close within 2 bars above the left side low, 91.92. This candle right here closes at 91.83. It was fractionally lower, but the MACD had already started to move up, and the stochastic was already showing a fabulous divergence. So that is, it could rally, and it rallied very strongly. However, here's the problem. The problem is that within the context of the arch formation, this is not such a good one because it came back way too quickly, too sharply. It should have stopped. If I put a trend line there, it should have stopped back on the week of the 29th of December, should have stopped around about 92.76. It went lower. That says to me, the dollar's going to have a bit of a problem, but there could still be another arch formation, maybe not so big, but it seems to me at some point the dollar is going to break that 91.01 support. That's the way I'm looking at it, and that's the way why we have it as more of a trade than anything else. Now, what's really important about this is, if I put it together, here is the weekly chart of BP, British pound. And you'll see that a beautiful bowl formation was forming. It was like a cup, but a stretched out cup. Right at that peak D that was made back on 22nd of September, the week of the 22nd, around about the 1.374 area, it pulls back a little too deeply, but it's within the up channel. And within this up channel, it's just be walking the 9-period moving average. It hasn't done anything great just yet. But I am looking at the British pound, and I'm looking at it. I'm not going to be able to do that now. Actually, I suppose I can. I'll just do this real quickly. So that's the level I'd be looking at right now. Let's go to a new parallel. This is not going to be, this is where you have to use some visualization. In other words, this is not the mathematical formula that I would like. There you are. Excuse me, a little scratchy. And what you can see here is that the bowl formation is 1 week, excuse me, is a little late. It's already been there once above all those left side highs. But for the latest one, it's a little late. But it is moving high above the 9-period moving average. So the British pound on a daily basis, 1.365, up above that is very good. And below 1.35, it says, more digestion is needed. Monthly chart is improving. It should go to a D above that high that was made that we were talking about. Let's see if I can get this right here. 1.3742. It needs just a fraction above that to start leg D. I want to go to the TLT, and this is really important. Huge plunge to the downside. Yeah, it's coming back a little bit, but it's down 87 cents at 123.08. One of the reasons why I didn't want to suddenly grab the TBT, which is the inversion, is because I just, let me show you why. The TBT, which is the ultra short Lehman 20-year T-bond, a treasury bond fund, had a big spike yesterday and today. This is actually only B going from this low here. But if I go back to the actual low that was made, where did it go? In terms of time, look, this is A, and that's B. If I want to use the left side, right side, to go to the high that was made right here at 30, around about the 36.78 level on the 26th of October, we could be there very quickly. So I'm not going to do it now. but my left side, right side price time match says it could do it very quickly if two things happen. And let's go to those two things right now. So this is the 20-year. I just wanted to show you this to give you a sense of what we're looking at. The TNX, the 10-year, screened yesterday to a leg E, and that E continues today. But it's really, this could be the D, and this could be an A, B, C. So I'm going to have to call it an E/C because the technicals are really strong. So I need to have the overlapping wave. I need to have the alternate count wave, but this is clearly a D. And look at the speed with which this is going on. So you've almost gotten to your left side, right side price time match. Look, in the TNX weekly chart, look at that. I used it as an exact low there, and 26.15 to 26.21 are the highs on the left side, and we've already gotten to 25.95. We might be there pretty quickly. So I'm looking at this and I'm saying, okay, there are a couple of factors that are involved here. And I'm looking at the TBT and the TLT to say, all right, well, what's the trade from here? My sense is that we've got to be looking at the short term. That's the 10-year. We've got to look at the FVX.X. That's the 5-year. Look at that huge move. Leg C only in the weekly, only a leg C in the monthly, and it has gone to a leg D in the daily. And this is saying just a little bit overboard. We could have a pullback, but the stochastic and MACD are very strong. So I'm trying to put this together. I'm saying, okay, I didn't see the trade in the TBT, but I do believe that we will have a lot of sound gone. My sound? All right, well, some people have the sound, some people don't. I don't know what's going on. Sound, I'll just put a question mark. Yeah, sound. So far, it seems to be okay. So what I'm looking at here is that I don't, just in terms of the trade this morning, TBT or TLT, I just think I have to stand back and let it just wait, because the 200-period moving average, which was our downside target, if the 124 level broke 123.09 and it went under that in the weekly chart, it went to 122.66, trying to come back a little bit. So I'm not sure just exactly what's going on, but I'll just keep doing this. Now we've got some questions. BK. BK is no, Bank of New York. We didn't want to do that. It was BX. Oh, here comes the break. I'll be right back. We'll see if there's a problem with the sound. Okay.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. So let's continue. We're looking at BX, which is the Blackstone Group, trading at 34.53, up 79 cents. This week, this daily chart is very strong. The MACD and stochastic are really strong. What's very interesting about this is that there's a left side, right side price time match. And that goes from the high that was made back on the 24th of October at 35.07. It drops down to the 29.50 area. And then it screws back up in very nice steady steps, going above the 9-period moving average and a little bit below, then strongly up, and then a little bit below, and then very strongly up. And it looks like it's trying to get to that area, that whole 35 area. 35.07 was the high. It's at 34.52 in leg E, and here's the Chapman wave inside wedge target line resistance. If it can break above that resistance of 34.64, it should be a quick trip, and it'll be there in a shorter period of time if it's there in the next 3 days or 4 days. But that's what it's looking like. Very strong. It's only in the leg C in the weekly chart. And there again, you've got the MACD just crossing positive, stochastic improving. Monthly chart is a pattern that I call the Chapman wave falling axe formation, slightly lower highs and much lower lows, and then it turns around, holds the 9-period moving average, and tries to push above. It'll go to a leg D. The moment it goes to 35.10, and it's at 34.50 right now. Yes, so I do like the Blackstone Group. If you're long, just hold it. I wouldn't be doing anything with this. Would I add to it? You got a point or so, but if you don't have it at all, and this kind of fits into your whole, to your portfolio, the formation of your portfolio, you like it to be diversified. This is a stock that fits very well into a stock that's participating well in this particular market, in this environment, at this particular time. So I would maybe just start a little position if you want to at least get your foot in the water. BX trading at 34.50. Next question I had was AAL, which is American Airlines. I don't think I've notated this for a while. Yeah, this is AB. This is a peak C in the weekly, going to a leg C in the monthly. If it can go over 54.48, which is just 78 cents away from where it is right now at 53.71, up $1.63. I was not sure about this count. I called it an F over there, but really ABC, this really looks like a new C. It looks like it wants to get there. So I'm going to call this G/C right now and say that American Airlines is acting very well. The MACD and stochastic are just okay in the daily. It's really the weekly charts that are carrying, and it's got a left side, right. Oh, this is the stock I wanted to ask Larry about. This is isn't this a 20-man, like a 20-man line? You've got an equal number of bars on the left. I do it in a completely different way until I found out that Larry liked to call it the 20-man line. And look, it went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 15 could get it right back to the high. So the high was 54.48. This high was here 54.40. Yeah, I think this could very, very well be remind me, someone. I'll ask maybe in the morning if I'm around. AAL 20-man line. It's a different technique, but it has the same results as the way I look at it. Yes, it's acting very well right now. I wasn't thinking that yesterday, day before. Didn't look at it yesterday, but the day before I thought, oh man, under the 9-period moving average. But this is a very good rebound. So AAL, that was a question. I can't remember who asked me the question. XAL was the next question. GT, okay. XAL. XAL, there it is. XAL acting nicely today. Finally, whoa, it had a huge pullback. Oh, this is a little different. Would I buy the XL here or would I short it? I do neither. I have to wait for another day. If there's another strong follow through, it's 116.60 right now, up 157. The XAL, the airline ARCA index, is able to go to 117.10. Close at the high. I'd say great. That's the information I'm looking for. Now there's a risk. Chapman wave falling axe. You know what I'm going to say? What's crude oil doing right now? I didn't do crude oil. It was the only one I didn't do. So let's just get that out of the way. At CL, crude oil, continuous contract. I'm doing something wrong. Let's do that again. At CL, press the button. There it is. So crude oil, yeah, leg D could be pulling back after today just a little bit. Yeah, leg D getting a little toppy. MACD and stochastic are outstanding. On balance volume's good, but it's gone a little toppy. I wouldn't be surprised in the next 2 days we get a bit of a pullback in crude oil, so the XAL could actually move a little higher. So the question was, what's the wave count? It made a peak E. It's pulled back, trough A, B, C. This is trough D right now. Often in trough D, if it holds the support line, that's where it can bounce. It's bouncing. It's above the 9-period moving average. I think it can have a bounce. I don't think it's going to go to a recovery high just yet. It needs a little more time. But a risk reward, staying with what I said, I need to follow through good candle, yes, tomorrow. But if you want to nibble on it right here, how would you play it? I don't know. All right, just the question is, where is it? And the answer is sell mode in the daily. It goes to a buy signal if it's able to cross the threshold of this downtrend line at 117.80, close above it, 118.80. That's like just over 2 points higher. The weekly chart is still in a buy mode, hasn't broken the 9-period moving average of 114.77, and the monthly chart is improving. That's all I can say right now. Made a peak D, but it's in the middle. It's actually in the upper end of the range. Good action. All right, next question is transportation, IYT. Here we go. IYT leg E up 1.09 at 199.95. E in the daily, E in the weekly, E in the monthly. Oh, man, this is amazing. So far, nothing to see here, folks. I think it's getting really close to a pullback, but there hasn't been a pullback yet. If there is a pullback, it's got tremendous support at 196 to 194. I'll deal with it in the next couple of days. We'll be watching closely to see if it does pull back. That is the transportation index. Next question I had was, where did it go? SWN, silver wheaton, right? Silver wheat, yeah. See, this is the reason why I'm avoiding some of these gold and silver stocks. Look, silver wheaton goes to from a trough, it goes to a leg A, then a, peak B, peak C, peak D, and then it pulls back really sharply. Technically, I should put a down arrow here because the MACD, the stochastics pull back really sharply with the price under the 9-period moving average. Technically, I should wait for the MACD to cross negative, but I'm not going to do that. I'm going to say right now, I'm calling this a peak D. If it does anything else, it'll have to start a new buy mode as far as buy signal to buy mode. I don't like this action at all. And that weekly chart, I spoke about it the other day. I said, I don't like the weekly. There are better charts. Wow, what was that stock that Sylvia called in? AAOI. I think that's AAOI. I think that was, what was that again? Yes, I said, be careful. The reason why I mentioned it is, you remember the pattern that we were looking at in the weekly? I said, no, I'm not going to touch this right now, because when it tests the weekly chart like this without crossing the 9-period moving average, let's go back to SWN. Look at this weekly chart. It's the same pattern, but enlarged. It's the same pattern. Be careful. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Just before I forget, the 5-minute and 10-minute E-minis, the 5-minute made a peak D, the 10-minute needs a peak D, a leg D at least, and needs to go above 27.49.75. At 27.50, it makes that leg D. I think it's going to do that. And as I said before, the reason why we didn't want to go short, not at the time, not that early opening area, is because the VIX index had just run up way too much. Let me clarify. It was the silver wheaten S, whatever it was. The word SWN. SWN is Southwestern Energy. So I'm saying just be careful there. It has the same kind of pattern that tends to retest the base a lot and then break it, just like AAOI. The stock we were looking at was Sylvia the other day did. Next question is natural gas, NG. I didn't want to go back into trying for this today because there's something really weird going on, and I think the weather's improving a little bit, so there'll be time. It'll have another run, but NG is down a little bit at 2.89. have patience. I think it's trying to form a base that's going to be a rallying base. Apple question. Yeah, we go. Apple. Apple is stuck in a range. Let's just say this: Apple stuck in a range. I don't see anything yet, either long or short. GE. The question is, has GE made? The question was the other day: has GE made? Wow, look at that! Has GE made some kind of a bottom? Well, I tossed up. I really wasn't sure. Should we go long? Shouldn't we go long? And that was the day of the actual break to the upside. That was on the 19th, I think it was. It made on the 28th. It made its low. Next day, after the doji candle, a nice turnaround candle. GE is up 46 cents at 19.01. This is telling me, you remember this very long-term downtrend line that I drew in GE? I said it's got to hold that. I think GE is telling us a story of rotation. And that means that the laggards are going to come back again. And that's telling me that until we have everything starting to go down in unison, you aren't going to get that 5 or 7% correction. And this is the period which is the most difficult to trade. I think G is looking very good. If you are in it, old G, I'm saying to you, yes, I think it has made a move. The next pullback might be one where you can start. You can even just tiptoe in 1901. Just tiptoe in right now. But it's really above it.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.